How do RRSPs work when you're incorporated? Let's talk about it. I just want to touch on a few things before we get started. So RRSP room is 18% of your income. Now there is a contribution limit every single year. So we're looking at $12,834. So let's say you made $71,300 this year. 18% of that would get you to your $12,834. Therefore, you would reach your contribution limit. Let's run through a little example here. Let's say your corporation made $100,000 this year, and maxing out this contribution limit is what's important to you. So what you're going to do is you're going to take a salary from your corporation. So you're going to pay yourself as an employee of the corporation. So what you're going to do is you're going to pay yourself $71,300 out of your corporation. Now, something good with this is the corporation is able to deduct that as a business expense. So what it looks like is you have $100,000, you're going to minus that 71, and then you're going to end up with $28,700, and that's what you'll be paying tax on. Now, there is the small business deduction, so you're going to be paying tax at the 11% rate, so you'll be paying around $3,000 for the year. Now, one thing to note if you do take this route is that because you generated income, you paid yourself a salary, you are going to have personal tax. And at that $71,000, you're looking at around 22%. And again, because you generated income, you have to pay into your CPP. Now, if you look at the other route here, you could also take no salary or just do dividends. But when you do this, the corporation has no wage expense, so there's no deduction. So the corporation is going to be paying tax on the full $100,000. But again, you have that small business deduction, so you're paying 11% on the $100,000, so that's around $11,000 for the year. So there's different strategies you can take when pulling money out of your corporation. It's not one size fits all. You can do a little bit of salary, a little bit of dividend. There's just so many factors that go with it. It depends on income, goals, just so many different things. So I just kind of wanted to do a brief overview of what it looks like. So if you guys have any questions, comments, anything you want to add, feel free to comment below. I would love to chat.